What's up, sons? It's Blind Red with Son of a Tech once again, and today we're going to talk about ASICs on the Radiant network as we have an announcement of two different ASIC manufacturers launching machines for the Radiant network. Now, this topic is going to talk a little bit about a couple other projects that are also going through similar ASIC launches or have in the recent past, potential for future projects that may obtain some sort of ASICs, and where everything sits as far as profitability. So let's go ahead and get into it. Welcome back, everyone. So you guys are probably aware that for quite some time, we have had the entity on the Radiant network, somewhere between 4 and 6 months, depending on when you start counting and how much hash rate was on there. It varies a little bit. Now, this was becoming a problem because obviously all of the new emissions were going to a single group of people based off of the address it was being mined to, which actually is a big surprise because we ended up having two, not one ASIC manufacturer be announced. The idea here is that we probably only have a single ASIC manufacturer that was actually on the Radiant network. Now, whether it was party A or party B is a little unclear, but based off of the amount of hash rate per unit, I'm thinking it is going to be the first announcement, which was the Dragon Ball Miner A11. The reason for this as well is that this was the announcement from the Radiant Discord as to who the entity was. The second group was Ice River. Now, if there is a connection there, I am not aware of one. There is some, of course, rumors surrounding them being, in pocket together, which I suppose could be the situation, but either way, we still had hash rate and all of those emissions going to a single wallet. And that means that the control over the units was a single entity. So to say that there were no issues or potential for a 51% attack is a bit amiss, just to clear that one up. Now, the first miner that got announced was the Dragon Ball Miner A11. This website was launched shortly after the announcement, and you can add this unit to the shopping cart and presumably purchase it through this link. I do not have an affiliate link for this company or anything like that, so I'm not even sure what their track record is in general. I do know that they do sell some other ASICs for Alephium, and that is also what makes this particular unit actually quite interesting in the fact that it not only mines Radiant, but it also mines Alephium. And apparently it does this at the same time. Does that mean that there are essentially Radiant boards and then Alephium boards in the same unit, or can the boards mine both? I'm leaning towards the former over the latter, especially because what I had been informed previously was that it looked like the amount of hash power for these units was 1.5 terahash. If you look at what they're advertising here, it's 3 terahash. Now, this could be a 3 or 4 board ASIC. We'll have to see what people do when they tear them apart later on down the line, but that would add up. If a single hashing board that was on the network was around 1 to 1.5 terahash, there could be 2 or 3 Radiant hash boards in here and a single Alephium hash board. That's yet to be determined, though, as far as the information that I have. Now, it is going to have 3 terahash on Radiant and 1.1 terahash on Alephium, and it will be 2,300 watts at the wall, which right now at 15 cents a kilowatt hour, which is average for the US, would be profitable. You can see here that I did have to use the actual calculator so that I could put in multiple hash rates. One for Alephium at 1,000. We'll actually put that at 1.1, 1,100 gigahash a second. And then down here we have the 3 terahash a second, which is like a ton of mega hash a second, at 2300 watts added in there for the pricing. We have the price of the unit at $10,000, at least before shipping and any tariff costs that might be applied depending on your geographical location when ordering. So this number could get much worse. I'm up to 40% more potentially after shipping and everything else. But we're just going to list that price for a little bit of an idea of what we're starting with. On Alephium, that is going to be 4.92 Alephium a day at $8.12 a day. And then on Radiant with the 3 terahash, it will be $129 a day with basically 84 to 85,000 Radiant a day at the current difficulty at $120 a day. This is going to come into basically an ROI of 77 days for this particular unit. Now, the interesting part about this that sets it apart from previous launches is that this hash power has presumably been on the network for the past 6 months. So as opposed to what we were looking at with kaspa or even Alephium, where the hash power had not actually hit the network quite yet, now we kind of have maybe a better idea or a less risky investment. Not only for that reason, but also because Radiant's emissions is quite a bit different than kaspa, at least. Now, we can talk about Alephium in a different video. kaspa, I think, is the one where we're really focusing on because the total supply is very, very similar, whereas Alephium's supply is quite a bit less, thereby, of course, propping up the actual price per Alephium. So I'm going to focus on that. The big indicators here that are different as far as what ASIC would be, I guess, have more longevity would be between kaspa and, of course, Radiant here, is that the total emissions cycle is going to be much longer on Radiant, meaning that presumably the unit will last a lot longer than it would on kaspa from a mining perspective. Now, price has a lot to do with that. So if you think, of course, the price of kaspa is going to keep up with, of course, the emissions reduction, then that would be something to take into account as well. But if we're looking at basically how long you're going to be able to earn Radiant and how much, or how much kaspa and for how long, you're going to be able to earn more Radiant for a longer period of time, presumably on kaspa with these ASIC units compared to kaspa. So that's kind of the strategies behind the scenes as far as from a mining perspective, what you're really looking at. And that's become very apparent here recently as more and more kaspa miners become less and less profitable. Now, on kaspa, we've had multiple iterations of ASIC units, and it would be amiss if we didn't mention that typically when you see a launch like this for ASICs, it means they're getting rid of old stock, and there is potential for a new version of these ASICs to be being manufactured in a short period of time, which could, of course, increase the difficulty and amount of hash rate on the Radiant network. But that's yet to be seen. It'll be a lot less stark, I think, than it was on kaspa, because all of these units have presumably been on the network, making up 100% of the hash rate for 4 to 6 months or thereabouts on the Radiant network. So it's a little bit more accurate from a calculator perspective on what your ROI would be, as opposed to either Alephium or kaspa, where you can expect a pretty stark decrease in, of course, your amount of volume that you're going to be able to earn with these ASICs. It should be interesting because this is the first time we've ever seen this kind of play out. We've seen it played out on the FPGA side of things with kaspa, but then it moves so fast to, of course, the ASICs on kaspa that it wasn't as big of a deal. And that was with, of course, those FK33s on the FPGA side of things. And once they started selling those off, well, ASICs were already on the path, but they basically were mining on those networks and then sold it off, and it didn't change the difficulty until, of course, the ASICs were launched. So hopefully that makes a little bit of sense as far as like philosophy behind these projects and what is changing there. I never recommend purchasing altcoin miners, ASIC miners, because you do get locked into a single algorithm. In this particular case, though, You do have two algorithms being mined, which could alleviate some of the blow if one of the projects does fail. You kind of have that fallback, but with the other Alephium ASICs being much more powerful, in this case, something like the AL5 or AL1 Pro from Bitmain, that is essentially at 16 terahash a second, 16 times what the hash rate on the A11 is, at only maybe like 1400 watts more. It's going to be very, very difficult to compete on the Alephium network with the Dragon Ball A11. Now, you could say, well, if it's the only Radiant option, it's still a good option. But very shortly after, we had an announcement from Ice River, who announced the Ice River RXD RX0. And this is basically on their Zero lineup. And they've been making these small at-home silent miners, ASIC miners, for quite some time, starting off with kaspa, having one for Alephium, and then now, of course, they have one for Radiant. And this one is 260 gigahash a second at 100 watts. If we took a look at the calculator in this particular case, that's going to essentially result in 7,324 Radiant a day at a revenue of $11.13 a day, and at 15 cents a kilowatt hour, the ROI projected right now is 37 days. This throws a wrench, of course, into the earlier statement that the hash rate is already on the network, because we haven't necessarily seen these particular units on the network, to my knowledge, as those boards were sitting around, like I said, 1 to 1.5 terahash per board. We haven't seen anything with this particular like 260 gigahash range on the network. So once these get delivered and turned on, that will presumably increase the difficulty on the network, thereby bringing down the reward reduction and lengthening your return on investment. But the return on investment here is quite incredible at 37 days. So there is that. Now, I do have an affiliate link for Ice River that they sent over a long time ago. I'll leave it linked down below, but they are currently sold out as of right now, as you can see. So it'll be in the future when they release another batch before you can get on board with this. And that really brings up the question, well, should you purchase one? As we've seen in the past, anybody that purchases in the very first shipping phase of these particular units typically can get ROI in the case of kaspa and Alephium. If you are on to the second, third, and fourth, you're basically increasing your chances of not being able to get your return on investment as more hardware is put online. So I definitely don't recommend, like I said, purchasing ASIC units in the first place for altcoins, but it becomes risky, even more risky, the further on down the batch line you get to actually obtain your return on investment. The best time to buy, I think, ASICs in general is typically after you get a full-on realization of how much hash rate there's going to be and at what growth pattern that hash rate's going to be at. And then the reduction of cost of the ASIC units themselves, and then kind of putting those in storage for the future of maybe a potential bull run, something along those lines. Maybe you want to hedge alongside some Bitcoin ASICs, maybe have a single kaspa ASIC laying around, a single ALF ASIC laying around, and a single Radiant ASIC laying around, right? And in that way, you're kind of hedged across multiple algorithms. So in case one becomes a brick, well, not all of them presumably would become bricks. And this is something that I think is important to bring up. Now, in this particular case, I think that, like what I've said before, is that we kind of already saw all of this hash rate on the network. You can't really review Humpool very well, but you can review Viper.net pretty well. This is the address that they've been mining to for quite some time, other than, of course, the maintenance that they had on September 1st, which kind of took it out for a little bit. But you can see that they have definitely been mining a ton of Radiant, which means they do have the potential to affect the market, and that could be considered good or bad. I think when you're talking in the form of ASICs, it's important to note that the amount of capital expenditure that they have had to deploy for research and development, as well as manufacturing, means that they are a little bit more tied to the project. And this is something that I try to explain to a lot of different people, because there is this idea that essentially if you are mining with GPUs or you switch an algorithm from ASIC to ASIC resistant, that it has a negative price impact. And I think that that is what we've seen, historically with the launch on Ironfish, et cetera, for an ASIC resistant algorithm. And that's because the investment lines are completely different, right? You're talking about having a large entity or whatever, right? A big company with a lot of investment, putting in a lot of money into a project. They're going to be less inclined to dump onto the network or dump their bags as a GPU miner with a large farm might be, because the GPU miner can move from project to project. That doesn't mean that inherently it's better. It means that it's better for price and it's better for developers if they're highly invested, probably better for investors in the short term. But if we are talking about the principles of basically having a well-distributed network with, a strong decentralized hashing platform, then obviously we have to talk about, does it matter? Does price matter more, or does decentralization matter more? Which is really what the arguments are going to come down to. I think personally what I had done here, obviously, if you take a look at my locals at sonofatech.locals.com, where I was talking about my plays, etc., is I've come to this full realization after both, kaspa as well as Alephium. I'm aware that these companies are putting a lot of money into it and they have a vested interest in the success of the network, meaning that the price will more than likely go up in the short term, because the more revenue that their shovels make, their ASIC miners make, the more possibility that they're going to be able to sell those units, right? And so if they have already invested a ton into R&D, throwing a few $1,000s to hundreds of thousands of dollars to prop up the price until they liquidate all of their machines is going to be something that is not out of the realm of possibility. And so it is like this, I've learned a lesson. Now, how does that make me feel? Not very good, right? Because I think at the end of the day, I do want to push towards GPUs. I do think that they're more decentralized. I do think that that gives more opportunity to individuals that are looking at getting into cryptocurrency and cryptocurrency mining. And I don't like the fact that the barriers to entry are getting into that $10,000 range. Of course, we could say, well, the KSO and the ALFO or the ALO and these kind of smaller $300 to $400 at-home ASIC miners are, the way that we prevent that. But if you have 260 gigahash a second versus 16 terahash a second, it kind of becomes a moot point, right? We're really, it's not competitive enough. Maybe from an efficiency standpoint, but not really from a economies of scale standpoint, which is really what everything is coming down to now. And that begs the question, is crypto really something revolutionary that's going to change the way that we approach finance if the entire business model and strategy follows that of every single industry that we've seen up to date? And that is something that I struggle with. I think at the end of the day, the best parts of cryptocurrency that do stick around is like the transparency of the network, knowing where, people are moving funds or when they're moving funds, and that being transparent to the entire public as opposed to just a few individuals in, I don't know, maybe government spaces or within the company internally, right? So there is that benefit still from cryptocurrency, but from the decentralized point of view, from the economies of scale point of view, from the barrier to entry point of view, cryptocurrency is kind of going down in my humble opinion, an incorrect path. That doesn't mean that you can't capitalize on that, though, by seeing this and understanding what these patterns are looking like. It could end up being in the future, though, that these patterns become so obvious that they aren't as impactful. For example, the halving cycle of Bitcoin pattern being so obvious that if everybody knows about it, they're going to play the game differently, thereby changing the game entirely anyways, and obviously lengthening out bear markets, changing the way bull runs move, and basically, well, at the end of the day, becoming a lot more predictable or a lot less volatile, similar to like a traditional stock market investment or something along those lines, which I think is a trend that we're also starting to see. Basically, what I'm saying is the more people that know, the more the game is going to change, because you can't keep playing the same game if everybody knows the game and how to win it. And that's pretty much how that plays out. So, will this strategy of basically dumping a bunch of investment into building ASIC miners and then pumping up the price of the coin to sell those ASIC miners, will that strategy continue to work into the future as more and more people become aware of it, start prepping bags to sell off? Probably. In the case of Radiant, what's really interesting too is that the timing of the way the Dragon Ball put the units onto the network before selling the units is different than what we saw on previous networks with both Kaspa and Alephium most recently, where on those networks in particular, you saw some hints of testing of ASIC units, maybe a few, but not 100% of the network being taken over by the manufacturer of the ASIC units. And that is a very unique strategy that we haven't seen in the past. I would say Dragon Ball would have continued this as well if there wasn't the threat of a launch of another device, which was, of course, the Ice River RXD RX0. And I assume if Ice River already has an RX0, that we will also see RX1s here hit the shelves at some point in the near future. It changes the way this game plays, right? As opposed to previously, where you would hear the rumor of ASICs coming out, then purchase the cryptocurrency and sell once the ASICs launch. What happened here is basically everyone was scared of the entity taking over the network, driving the price all the way to zero, and therefore avoided purchasing the cryptocurrency, when the strategy would have been purchasing the cryptocurrency, knowing that they would eventually launch because they have some sort of financial investment into the success of the project, which is what I had talked about on locals when I was talking about accumulation. And that's really where it's at. The sell time still ends up being around the same time of, around the announcements of the ASICs to get your money back, and then you can hold some for the price to continue to go up as hash rate goes up. I still think I still think hash rate follows price, not the other way around. But with something like Radiant, where it's so easy to influence the price of it, I think it's a little flipped at this current time until more investment comes in. Now, we've seen trading volume go from the tens of thousands to the hundreds of thousands, and even up to as high as over 1 million on daily trading volume since the announcement of the ASICs. So this is changing very quickly as well, and you should pay attention to it. So there is my thoughts on Radiant. Of course, price, like we did talk about, did go up quite a bit. We had noticed, of course, some initial attempts to drive up price before the announcement. Those got sold off and liquidated pretty quickly, as there were a lot of people looking to get out of Radiant. And then the price continued to go up with some sell-offs as people were trying to get out because, they didn't want to be a part of it. And essentially, they just ran out of money, and the trading volume went so high that it priced out a lot of the low-end investors. And I think that they've pretty much capitulated at this point. And we are probably at a pretty decent price and a pretty stable price until we see essentially all of the Ice River ASICs come online, which probably won't cause as much of a sell off because remember, Dragon Ball's really still got a ton invested into it compared to a single Ice River unit that's going to be generating 7,000 radiant a day, just like $10 when your trading volume in 24 hours is whatever, over a million or over half a million, I think on average right now per day. I don't see that those causing a big sell off at this time. I don't see Dragon Ball causing a large sell off either at this time because their investment strategies wouldn't call for that. So what's in the short term? Not financial advice, but the targets I think really is somewhere between that 2 to 4 cents, breaking out of the tenth of a penny or tenth of a cent realm here in the probably next few months on Radiant. And then finally, like a bull run estimate is still actually, because the emissions are more similar to other small cap cryptos we've seen in the past, I think that what you would see is going to be around that 16 to 20 cents in a presumable bull run. If or when or how that happens, I don't know. So short term, like I said, I think we definitely get into the pennies phases. And then after that, I think we'll easily see that go up from there, just because your total supplies are similar to things like essentially Ravencoin or even Kaspa as far as total supply goes. And then their emissions are a little bit stretched out, similar to like something you would see with Ravencoin. So that's kind of where all these numbers come from when I'm playing around with them and looking at it for the future. Of course, things can change that. There can be Bitmain coming online, driving that price up faster. There can be the RX1s coming online, driving that price up faster. Those types of things are definitely possible in the near future. So let me know what you guys think of Radiant down in the comment section below. Sentiment has definitely shifted. It has shifted into the I should sell phase now, where I think previously it was in the I should buy phase. I think we're shifting out of that pretty rapidly here, and that is because previously everybody's thoughts on it were essentially, if you support it, you're a terrible person, and now if you don't support it, you're a terrible person. So then obviously do the opposite of what the crowd says, and things tend to go okay. I'll see you next Tuesday.